Welcome back to another episode of my trading vlog, where most of the views come from returning subscribers. If that's you, I'd appreciate a like. If not, consider subscribing. I want you going in the morning today because, as I'm sure you've heard, breaking news: inflation rises at slowest pace since March of 2021. Investors go crazy and the markets pop higher. The S&P 500, the Dow 30, NASDAQ, Russell 2000, everything is up, and it's such great news, right? But is it really that big of a deal? I don't think so. To start, it's above the target still. We're still above the target at 2%. And I'm not an economist, but there's a lot that could still threaten to push the U.S. economy into recession. And one of those things is economic slowdown in China. Something to watch for there. And we really haven't seen the extent of the conflict in Europe yet. There's some more stability out there. We need to be careful of that. And, of course, interest rates are going to continue to rise. And as interest rises, that disincentivizes risk being assumed in the markets. Why would you want to perhaps lose money in the market when you can secure returns through bonds? Anyway, neither here nor there. We're going to start with GME on the hourly time frame. There was a downtrend through here that has been broken, but we haven't gotten a confirmation high above that last peak towards 24.36. We need to get that high to really be bullish. To me, it looks like we really could be forming some sort of pennant through here where we've had a reactionary ABC waveform come through, and this is pulling up out of this downtrend we started, and this count is in yellow for 1, 2, 3, 4, and 5. Bearish divergence between waves 3 and 5, resulting in that reactionary trend popping higher. And now we see the price spinning along this downtrend. This is something I was talking about yesterday. I said we could easily spin on this downtrend for a while. We're starting to do that, and I think this is what's going to characterize our pennant through here, which would be wave B. Not typically wave 2, but wave B. And then we'd be looking for wave C on the extension. And that extension target is pretty nice. If we get a full move 100%, you can see that the target's 25.94, and we gotta get through 25.51 first. So this is how I'm interpreting this, is that this downtrend is going to create this pennant through here for wave B and a corrective ABC push higher to challenge 25.51. First confirmation comes at 24.36, and then at 25.51, and then we'll get to that target. And if we extend, then we start to get excited, but we still have a lot of support resistance at 26.45 as well. So I have a few critical levels through here. Of course, that's all assuming we get through this downtrend. If not, then we'll have to start another count that shows more downside, which isn't everyone's favorite, but you gotta do it. AMC is moving through a pennant already, a horizontal triangle, if you will, challenging that same downtrend, starting to reject now, and you can see that there's actually a bearish divergence through here in the RSI, where we got lower highs in the RSI but higher highs in the price, and we're reaching overbought here in an ABC wave form. This could be a motive wave all by itself. If I zoom in a little bit, maybe we try the 15-minute chart. It's possible that we can get a chart pattern through here, but honestly, it really does look channel-y from here to there, right? Looks like a channel. Probably is a channel because it's a motive wave C. In which case, we're looking for a reversal now. Probably going to get it because volume's not very high. And although implied volatility has been positively correlated with an uptrend, we're seeing that resistance come in at the downtrend, and now implied volatility is starting to drop. We're probably going to enter at least a corrective phase. Bearish reversal, I believe, is here at the top of wave A at 427. So we've got a ways to go before we actually get bearish. You can kind of see that I'm starting to characterize this pennant through here, and that bearish reversal line is right in the middle of that. Kind of not a coincidence, I think. Really not. We're going to have to watch and wait for the daily close on GameStop and AMC. I want to take a peek at SPY too because, yeah, that's a big up. Woo! Whoosh! And off SPY goes to the races. I want to turn on a blank chart. Here's a symmetrical triangle chart. I have too many charts. Way too many charts. Here we go. This is blank enough. I'm just going to draw something, and you can tell me if I'm crazy, but I really think that we're in one of these guys, where we've had waves A, B, C, D, and E. Wave E typically breaks the AC line, which here's that top trend line. We're getting pushed way up and high. Of course, volume is low. Implied volatility is actually dropping here. This does not look bullish to me. This looks like we're topping out, and that's something I've been saying for a while. is that we're topping out, and this is probably a little wave E through here. Bulkowski's chart pattern analysis software patterns identifies a rising wedge through here. We've had an upward breakout of that. This looks like a very frantic wave E, very typical in this pattern. You can see the bearish divergence forming there, higher high in the price, lower high in the RSI. We're seeing that break, which to me signals significant high is coming in right now. This has been a very convincing wave, hasn't it? In fact, we might even extend this whole pattern out like this and just make it even one bigger, one massive wedge, A, B, but then we have way too much space between trendline touches here, which makes me think that it's actually best described in the smaller form here, and we are just peeking out, and maybe we peek out one more time on a smaller time frame too, because that's how fractaling works. You know, you get the same chart pattern over and over again in smaller reiterations. Like right here, this is kind of that same thing. Maybe I can finagle that to look better. I don't know. To me, it looks like a top. Really, honestly, it does. And when I turn on the candlestick chart, which I don't do too frequently, you can see that there's a big gap here. Big gap breaking out above that pattern. Volume is low, implied volatility is flipping down. To me, not so great. Really not so great. I want to go look at NVIDIA as well, because it seems like NVIDIA is responding with some buying action. You can see that we're pushing up, and I've been waiting for this rising diagonal to form through here to form a top, and there should be some more upside there, and expecting that breakout to that 100% target at 473.89, which I'm seriously starting to doubt if we're gonna see it, but we really could. You can see that this bearish divergence here is being tested as well. Again, when you get the bearish divergence like this, watch for it to break, and if it breaks, then you get your significant high, because you're completing a motive wave on a higher degree, in which case I would need to find a new count. This C wave, you can see I have A, B, and C. Crazy, right? I mean, the target was 263, and well, then earnings push this thing way higher. But this is basically what I see SPY doing, is forming one of these guys as well, except we've already had that upward breakout of the AC line, and we're seeing the target reach there and that reversal which follows. Interesting stuff, right? Very interesting stuff. I want to go look at IWM too, because I just did some analysis here, and I put a target down at 194.44. You can see on the daily time frame we've had a high of 193.05 thus far. Turning on the hourly chart, we came a lot closer to that target, peaking out at 192.39. We don't always necessarily get these targets reached. This is pretty close, and so I'd be tempted to say that we might even be there on the closing basis. Of course, it doesn't quite look like that. The RSI is doing great. Look at the RSI through here. Look at the RSI. This is the average prices, right? This is starting to form its own pattern through here. Is this really what I'm looking at? Oh my god, that's so sharp. Never trust a sharp uptrend. I don't. I mean, that's nuts. And let's go look at PLBY to wrap it up, because PLBY is also doing some pretty interesting things. I'm gonna turn on my 15-minute chart here. There was an upward breakout of this level at 186, even pushing above there, reaching a high towards 188, but then reversing and turning down. And now we're seeing that's pulling up off of this trend line for a pennant. And this is why I revised my Elliott wave count to the alternate count. Remember, it's always important to have multiple wave counts, because there's more than one correct wave count at like all times, and so you gotta have an open mind about it. And on the closing basis on the 50-minute chart, this looks really good for an impulse 1, 2, 3, 4, 5. You're gonna remember I had these labeled A, B, and C. It always starts that way, and then eventually you get wave 4 and 5, and then you have to relabel everything. Classic bearish divergence between waves 3 and 5 at the 70-minute degree, shown in yellow and with a red line in the RSI, and between those price peaks. You can see the uptrend that formed there, which has broken. We are now in a corrective trend, which is being characterized by waves of 3, 1, 2, 3, or A, B, and C. And now we've had another trend line touch up here. 2 consecutive trend line touches is typical of an ABC wave. Here you go, ABC, and we have 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1. It's just, maybe you can call that little sideways thing in there too. 3, 1, 2, 3. We're finishing up this pennant. From here, we're going to be waiting for a breakout. If we get the upward breakout, we're targeting $2 better, 214, which would be very significant. This is a very strong level of resistance at 186, or what was this high at? Oh, that is the high, 186, maybe 192. We get above there though, and we could be fly to the races. There's a Gap up towards $3, which we need to fill. We don't need to fill, but that's where it is, and that's kind of where I'm looking for price to jump to on some good news. We're just waiting for that good news. Just imagine this thing going like this. This is what I see Playboy doing, honestly. Some wicked rallies. It'll do a meme stock move. I don't particularly like the meme stocks because they make those moves, but I think on a fundamental level, Playboy is a better company, and they're doing some awesome things in terms of their business. You see that there's a bigger pattern here. The price has just ran into that level and is finding some resistance. We'll see if it breaks through. Volume so far on the day is low, but the market's been open for like an hour and a half. Implied volatility is pretty flat. When implied volatility starts to tick back up, then we're going to get really excited, and when it gets above 183, then we'll start seeing the price really stretch its legs. That's what I have for now. It's a morning update. Inflation is still high. Sorry. Yeah, it's the lowest it's been in a while, but it's still high. And honestly, there's a lot more going on. Remember, the stock market is not a direct reflection of the economy anyway. That's all. Happy trading.